You're watching today's video technical update presented by FX Times. It is Friday, May 7th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. So it's Friday, and we'll take a look at the yen crosses. In the previous weeks, we have seen that when the yen is weak, the Aussie and the Canadian dollar perform the strongest, while the euro and the pound rallied within its bearish context. When the yen gained, the Aussie and the loonie held strong, while the euro and the pound slid the most. The dollar yen was showing strength after forming a bottom, so there was a lot of room to rally. During this week, however, we saw the slide against the yen was universal and possibly even more apparent in the commodity pairs, in the commodity currencies such as the Aussie and the Canadian dollar. This video is being produced at about 4 p.m. Eastern Time at the close of this week's trading. The euro yen is in a similar situation. Here we see that the decline this week was held above this previous low here, the 2008-2009 low. So this support is holding, and we see that this support goes back here. Here was resistance, support. This was back in 2001, 2002. So a very significant power line. If that breaks, we may be testing 108.40, the 78.6% retracement. At the moment, we see this rejection. So we're going to see this in a lot of pairs, a lot of this type of rejection. Now this may be a dead cat bounce, or it may be a clear out, and we're going to have to wait till next week for more clues. Here's a daily. We see that today we had the market supported above 113. Okay, so look for the market to return to this previous support to test it as resistance, and if that breaks, then that means that this is just a clear out. Otherwise, we may see some further consolidation to form a bottom here. So that's one scenario. But if this is just a dead cat bounce, then we would see topping action next week and resumption of the previous decline. And if that breaks this low right here, which is around 113, then our next target would be at 108.20 area. Okay, now 4-hour time frame, 1-hour time frame, you might be able to use this as a projection. Here we have, if we have a rally to start next week, we could project it like that towards 122. 122 is around here, the previous support area. So again, stalk this pair to see if this is a clear out or a dead cat bounce. Here's a look at the pound yen. As we've seen, the market was consolidating here. We anticipated another rally and to break the previous high at 146 area. However, risk aversion took grip of the market this week, and the pound yen slid on Thursday. Friday there was a quick bounce, but right now it's actually staying above this previous low here. Okay, so that's actually a good sign for the pound. Now it wasn't able to close below this previous low, and if you take a look at the weekly, if we break that low, the next support is near the 120 area. So this is a very important, very significant power line right here at 131 area, and that area held up on Friday, so the pound yen looks to be resilient. If we take a look at the 4-hour time frame, we see the market is in a congestion pattern. Looking at 1-hour time frame, we see this kind of consolidation. There might be some another rally to start the week, but to be honest, it's we should wait until the dust settles. The market is very volatile, and there was pretty much no way to have seen this coming. Although the break of 140.80, that was the target of last week, the break below 140.80 was a good sign that it was going to continue declining. But the strength of this decline was not anticipated. So now we may have another rally here to retest that target we had last week at around 140.80 to see if the market can top off and pretty much I would be anticipating some consolidation as the market tries to figure out where to go next. Okay, here's a look at the Canadian dollar Japanese yen pair. We had a few weeks where the market topped off here around, let's see, around 95 area, and then this week, of course, risk aversion grips the market. Commodity currencies decline. Really anything against the yen declined. And then we had this break of the double top, retest this previous low here around 82, 81, and the market rejected a decline further. So this is, again, a very broad-based rejection of this risk-averse move, and the market came up, actually tested this previous support area. We could see this more clearly in the 4-hour 1 hour time frame. You see this area was tested, so it's showing resolve. The bears are showing resolve here, and we may continue this decline next week if the market can create a head and shoulders here. Okay, so and if you look at the move, this is actually a very strong move in this pair. Starting here, basically this week it covered 1,200 pips before bouncing back up. So very strong. Commodity currency seems to be under a lot of pressure in this risk-averse environment. If we look at the Aussie yen, very similar, so I'm not going to get too deep into it. Here's 4-hour time frame. It's almost the same chart. You almost can't tell the difference between Aussie and Canadian dollar yen. So same analysis. Here's the weekly. Here's the support. Did not break below this support. Looking at the Aussie, similar decline. Again, this previous support here held. So there's there's some strength, but if the market doesn't rally back into this consolidation zone, as we've seen in the 4-hour time frame, see this consolidation zone, then further decline. We may see next week. We may see the market eat up this tail next week and continue the decline. But overall, I think we will enter into a consolidation zone. Okay, or a consolidation mode. All right, so that's it for the Aussie yen and Canadian dollar yen. I have been bullish on the dollar yen, but apparently, turns out that it was a little premature. You see, the RSI here did not break above 60. Our anticipated reverse head and shoulder did not actually break, did not actually form, as the market failed to sustain this break. It was, I looked at 94 as the resistance, but the market showed me that it's actually 95. So looking at the daily, we had a double top, we had this bearish divergence, and the market broke below in a very strong move, but supported here at above 88. So now we have a range between 88 and 95, where the middle of this range seems to be a power line as well. So the market is going to either consolidate here, lower range, or upper range, depending on the tilt of risk aversion, risk appetite. So next week, wait until the dust settles, see if the market can chew up this tail and continue declining. Otherwise, and that would say that this is just a dead cat bounce, that Friday's rally was just a dead cat bounce. However, here looking at the 4-hour, actually looking at the 1-hour time frame, we see this is a possible projection. We have a negative RSI reversal here, so this is a swing projection down to 88. But overall, for this pair, it's returned into consolidation mode, as you can see in the weekly, between 95 and 88. That's all for this pair. And that wraps it up for this week. Visit fxtimes.com for more analysis updates and live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you a great weekend.